Hi everybody, welcome back to this week's edition of RHO Market Chat. As usual, we will recap on what I said last week, and today we will cover the fear of COVID second wave in United States. We talk a little bit about US unemployment data. We talk about gold. We talk about Singapore phase 2 reopening play. We talk about the week ahead earning data and also the economic calendar. All right, so last week we were ahead of the curve, all right? So I was warning that I've seen sign of the COVID increase in US in the daily cases, right? So, and the reason why I figure that, COVID could be re-emerging in US is because the US economy opened on Memorial Day, which fell on May 25th. And around about the same time, we had the massive street protest that was ignited by the death of George Floyd. So I figured that, and as the CNN article rightly pointed, the incubation period for the COVID is about 14 days. So if you work 14 days forward from 25th of May, then we will expect the COVID to re-emerge somewhere this week, and it happened. All right, and I was also saying that, I was expecting the COVID to re-emerge, or the second wave of the COVID to strike. At the same time, our chart coincidentally is showing a market top on Nasdaq 100. And why is it so significant that when the Nasdaq 100 hits the peak, the Wall Street indices, will fall? And that the reason is because Nasdaq has been the market leader, all right? So far, we have seen all the tech stocks leading the market. If the market leader fall, we would expect Dow Jones and S&P to follow suit. So I said, watch the 10,000 mark. The minute it hits the 10,000 mark, this is where we could see a collapse. And this was exactly what happened, right? So NASDAQ hit 10,155, and then it took a turn down, and it went to a low of 9,499. And my target really is that if this downtrend continue, we could be heading towards 8,800. So I also talk about many of the Wall Street indices, and I'm just giving an example here. S&P crossing above the FIBO retracement level 61.8 and going above the 200-day moving average. So what I said was, well, everybody is turning bullish on this indicator. I was not bullish about it. I think that, from historical price action, this is actually a bearish sign. While everybody interpret it as a bullish signal, I think it was bearish, and I think the market should be coming down. So that's what it did, all right? After crossing the FIBO level and also the 200-day moving average, we had NASDAQ coming down to, on 15, it went down to as low as 2984. Okay, and I talk about the Sembcorp industry chart. I talk about, I said that Sembcorp Group, the merger plan of the Sembcorp industry actually benefits Sembcorp industry, but do not benefit Sembcorp Marine. I expected Sembcorp industry to go up, and the expected level was between $2, 2008, and 330, which is the next resistance. And so that was what happened, right? On 9th of June, the next day, it hit a high of 2.23, all right? And it has since retraced to 1.93. So I also talk about Sembcorp Marine, and I said that I'm bearish on the long-term prospect of Sembcorp Marine. I even show you the trade plan of Sembcorp Marine, that it will hit to as low as 53 cents. All right, go back up again and should be coming down towards 53 cents, and that's exactly what happened today. In fact, we hit a low of 535. Okay, so this is Sembcorp Marine trade plan. And so let's go to our topic proper today. So this is the update of the COVID cases in US. And the last update was 5th of June. You could see on 5th of June, we had a cumulative number of COVID cases in US at 1.9 million. And after 1 week, we are seeing 2.056 million people. And every day we are getting about 25 to 29,000 new cases of COVID in US. And that is like a sign or that the COVID second wave could be emerging. So this is a chart, all right, that shows that many states, right, in the US, particularly Texas, California, Florida, all right, on a 7-day moving average is climbing, all right, except the New York state. So the trend in the US does not look encouraging. If New York is excluded, and the market seems to be starting to react to this news just this week, all right? And today, we see that the Dow opened down about 600 points, all right? And it is really reacting to this news. So the average number of daily cases in US, excluding New York, has risen 6% since late May, and it is down by 14% from the peak reached in early May, even though, more importantly, the number of deaths have declined by 52% from April's peak. All right, some people might say that, well, the new cases may not be that important. The death count is more important, all right? But still, all right, what we have is that, for the record, the number of new daily cases in California has risen by 68% since mid-May, while the number of new cases in Texas is up 78% since late May. So as for Florida, the number of new average cases have surged 87% since late May to a record of 1,230 cases per day over the last 7 days. So this is pretty alarming, and I believe that the stock market, although it has been on a rally last month, cannot ignore this news. And last week we had the Treasury Secretary Steve Mnuchin saying that, even if we have the emergence of the second wave of COVID, the US should not go into a lockdown again. So these cases looks alarming. And the question is, how will it affect the financial market? So I think that, I've always been saying this, that if the market were to come down or to retest the March low, the economy in US, one of the criteria for that, or one of the signs that will happen, will be US going into the lockdown again, and businesses affected, and then we will probably see a March low. But otherwise, if the COVID cases looks good, then we may not have the market testing the new low. All right. So if there is no renewed spike, in the next few weeks, cyclical stocks are likely to renew their rally as the chattering classes start talking about a V-shaped recovery. Still, all this depends on assumption that there is no renewed spike. All right. So everything revolves around the COVID. So if you have a second wave, the market is coming down. All right. If we don't, then we would have a rally that will resume, and people will start talking about a V-shaped recovery. Okay, So the market got excited, all right, a week ago about the unemployment data. So a week ago, we had market expectation of unemployment data to be 8.2 million, all right? But it sort of gained 2.2 over million job, all right? So that sort of gives the market a jolt. So what I want to do now is to look closer into the unemployment data. And the question is, all right, will the unemployment data continue to look good going forward, or is this going to be a blip? Okay, so I don't think it's going to be a blip, all right? So this is positive for the market, all right, in the sense that, the total unemployment, right, I read to you, right, the total unemployment surged from 5.8 in March to a record of 23.1 in April and was 21 million in May. So of the total of in May, 15.3 million or 73% are classified as unemployed on temporary layoff, meaning to say that they are or they have been offered to return to work or are expected to be called to the job within 6 months. Okay, so there's a scheme in US for the employees, all right, to sort of classify these guys as unemployed temporarily. But if they get rehired back, all right, if the employer get rehired back to them, all right, some of the loans that the governments give, all right, to these employers will be forgiven. So if you are employer, right, you will want to make this happen. You will want to make sure that your employee who is on a temporary layoff come back to work, which means if the COVID situation improves and the US economy continue to open, a lot of jobs is going to go back. All right, a lot of unemployed is going to be rehired because they're on a special contract. All right, so they're not really unemployed. 73 of them not. But if we go into a lockdown, all right, then all bets are off, all right? So which means the unemployment data will stay or get worse because they will not get rehired again. Okay, so this is down from a peak of 18.1 million in April, 78% of the total unemployment, but up, all right, 800,000 in February, which is 14% of the total. So excluding such temporary layoff, unemployment rate in May would decline from a reported 13% to only 3.6%. So this is why, I've been saying, what I said was, if the economy continues to be open, the unemployment rate will drop drastically, all right? So this is the new law, all right, been relaxed. So the new law relaxed rules on PPP loan program, the requirement that companies have to spend 75% on the PPP loan on payrolls to qualify for loan forgiveness has been reduced, all right? So smaller companies or companies, things are making, the government is making things easy for them. And that means that the amount of loan that can be spent on other expenses, including rent, mortgages, payment, utilities, and interest alone has increased 25 to 40%. And so this is good news for the company and for the stock market, all right? So the new law also extends the time period to spend the loan from 8 weeks to 24 weeks, while pushing back the deadline to rehire, all right, employees from 30th June to 31st December. So originally, the rehire period stops, or the deadline was 30th of June, but it has been extended to 31st December, all right? So from now to 31st December, the companies can rehire their employees and have their loan forgiven. So what we have on the monetary front, all right, was this. So the Fed last week expanded Main Street lending program to allow small and medium-sized business to be able to receive support. All right. So the medium-sized loan is lowered from 500,000, all right, to 250,000, while the maximum loan size has been increased from 200 million to 300 million. The term of each loan is increased from 4 years to 5 years, while the delay in principal payment is extended from 1 to 2 years. All this as well attempt designed to help the so-called Main Street, where Fed has indicated that they will not raise rates for a long time to come. And this has driven stock market up, except prices, inflation, wealth inequality, as well as the cost of, and as well as, of course, the zombification of the corporate sector as they have done in 2008. All right, in last week's FOMC meeting, the Fed chairman said that we are not thinking about raising rates. So he's saying this raising rate is freeze, all right, for now, and he does not project a rate hike until 2022. So what does all this, which asset class, right, is the main beneficiary? So I think gold is the main beneficiary. So, and what we saw last month or 2 weeks ago, last 2 weeks, was gold actually did a correction, right? So bullion price declined 5.3% from a high of 1765, all right, on 18th of May to 1671. All right, so today it has gone back up to 1710. So the macro seems to be suggesting, that gold should continue to go up. All right. Another reason why I am really quite bullish on gold is despite the market strength or the bullishness on the market, and despite gold being a very crowded place, all right, recently we have seen, all right, the net futures on gold position winding down. So the long position is winding down. So in the longer term, right, positive points is how little gold has corrected. So it's, even when we have so much wind down in gold long position, it has not corrected a lot, all right? And the money managers gold future net long position have declined 58% from the recent high, all right, to 238,000 contracts reached in mid-February to 100,000 contracts in the week ended 2nd June. So you could see there's a lot of winding down as the market correct, but gold has proven to be resilient. So that is why, right, this price action to me is bullish, and I should think that gold on every dip or every correction will be a buy. So this is my gold trade plan. These are the key levels. All right. So I would expect gold, right, by end of year, all right, to hit its all-time high at 1923. Okay. But at the same time, in the meantime, these are the key levels to be watching for. All right. So these are the key levels. So, if gold comes back down to 1680 on my chart, that would be a good buy. So what is, gold is trading within a range. You can see that it is trading within a range, but on the broader trend, right, it is a macro uptrend. So that is why I'm bullish on gold, both from the fundamental and from the technical aspect. So I just received news tonight that the Singapore is going to have a phase 2 reopening on 19th of June, which is this Friday. Okay, so end of the week we're going to have a phase 2 reopening, and I think the two main beneficiary of the reopening story is ComfortDelGro and SATS. All right, so that's why I want to take a look at the charts of ComfortDelGro. All right, so these are the key levels for ComfortDelGro, and ComfortDelGro is on a very nice uptrend, although we had a small correction when it hits this chart point at 168. It has since corrected to 158. But I think this is a pure Singapore phase 2 opening play. All right, so you will have increased traffic in Singapore. All right, and some people will ask me, is SIA a reopening play? I don't think so. I think SIA will continue to be under pressure because the international air routes are not open yet. All right, only some commercial flights are open, special flights are open, but not the international passengers flight, which form part of the air traffic. So ComfortDelGro a pullback will be a buy, but I think that the 168, all right, high will be taken out again. Okay, so and also I want to talk about sets. All right, so this is the set has got like two play going for it, phase 2 opening play and the opening of air route green lane play. All right, so recently we know of news that some green lanes in our international flight has been opened. All right, and that is positive for sets. And when you have your phase 2 reopening, a lot of people now can go to the shopping centers in our airports, and therefore we will see an increase in volumes and business will improve in the airports, and that's good for sets. Okay, so this is the earning data for the week ahead. These are earnings coming on stream, and the important macros, all right, on the economic calendars are this. Please take note. And so this is the end of this week's edition of RHO Market Chat. I hope you enjoyed the session. See you again.